Welcome to San Gabriel Valley Habitat for Humanity Affordable Homeownership Program General Information Session. Today we'll be going over who is San Gabriel Valley Habitat for Humanity, the Affordable Homeownership Program, eligibility and qualifications, affordability restrictions, how to prepare for the program, and lastly, how and when to apply. Our vision is a San Gabriel Valley in a world where everyone has a decent place to live. We're a nonprofit affiliate of Habitat for Humanity International, established in 1990. We service the San Gabriel Valley area and surrounding communities with the help of many donors and volunteers. We have two resort locations, one in Duarte, where you can buy home improvement items for less, a store in Pasadena, where you can buy new and gently used home furnishings. We have three programs available for low-income households whose total household income is less than or equal to 80% area median income. We have a first-time home buyer affordable homeownership program, which we will be focusing today. We have a home preservation, which is for homeowners who are in need of critical home repairs. There's an ADU program for homeowners who are looking to convert the garage or build a new construction ADU. We're a low-cost program, one-stop shop, where we help you with qualifying, financing, plans, designs, permits, and construction. So we do all that for you with our program. The Affordable Homeownership Program, it's a first-time home buyer program. It's for low-income households whose total household income is less than 80% of the area median income based on your household size. Limits are established by HUD every year. Your mortgage payment is based on 30% of your gross monthly income, which includes your principal, your interest, hazard insurance, property taxes, and HOAs if applicable. You will be receiving a 30-year fixed mortgage with a below market interest rate. Approved buyers help build their own homes alongside volunteers through sweat equity and complete home buyer education, which we'll discuss further in detail. Now we'll go over some of the eligibility requirements. Number one, you must demonstrate a need of housing, meaning your current living conditions are substandard, it's too crowded, or it's too expensive. Number two, you must demonstrate the ability to repay a mortgage by having good credit, no collections, no charge-offs, no liens or judgments, and no bankruptcies within the last 7 years of any kind. You must also meet the minimum annual income requirements, which vary through projects. Number three, you must be willing to partner with us by completing your sweat equity and homebuyer education hours. Four, you must also meet the definition of a first-time home buyer. Now we'll be going over the program qualification requirements. First of all, your entire household must earn less than the maximum income listed for your household size. In addition to that, there is a minimum income requirement that varies through project. So for an example, if you're a household of 5, the maximum income for the total household is $109,000. We will go over that in more detail on the next slide. Additional income requirements is that you need to meet the minimum income, which varies through project. Number 2 here on the right, we will be running your credit. We're looking for general good credit, no open collections, no bankruptcies within the last 7 years, no charge-offs, judgments, liens. Number 3, you will need to have money saved up for the purchase of the home, anywhere from $16,000 to $20,000 approximately. And part of that is a 1% down payment of $7,300, which could change. Number 2, you'll need about $1,000 and $6,000 for escrow closing costs. Number 3, you do need to have savings of 6 months of the mortgage payments in reserves and savings. And lastly, we will be calculating your debt to income ratio, which is a 45% maximum allowed for the program. Now let's go over the differences between incomes. There is household income and there's qualified income. Household income is what it sounds like. It's the total income of all household members who are 18 years and older from all sources. Qualified income, it's the income that's going to be used to qualify for the mortgage. These are the persons or the applicants that will be responsible for the mortgage payment and will be on title. That qualified income does carry a minimum income that varies through housing opportunity. Let's look at that table on the right. We'll go over a sample of household of five. We're using 2023 annual income. Applicant one is an adult. Applicant two is an adult, probably the parents. Household number three is a young adult, could be a dependent, maybe going to school. Household number four is a minor, also going to school. And household number five could be a grandparent or parent of one of the applicants. So we have five total household members, and their incomes there on the right. Notice the asterisk on household member four, who's 15 years old, who is a minor with $1,000. Maybe they making some income part-time in the summer. They will exclude this income because they are a minor. So if we include the applicant one, two, household member three, and household member five, total household income is $102,395, which is under the maximum income for a household of five, which is $109,000. So they meet the requirement. Now for the qualified income, it's going to be the two incomes from applicant one and two. These are the two persons that are going to be responsible for the mortgage payment and will be on title, and they must meet the minimum annual income for this housing opportunity. That minimum income varies, and please inquire further of what that could be for this particular time. Student and education loans. Now, there's been a lot of different news about how student loans and education loans are going to be treated. Some are being forgiven, some are not, some are on pause. When we run the credit of the two applicants and we see student loans or education loans and they're not showing a monthly payment, we will still need to consider a monthly payment of 1% of the total aggregate balance to calculate a monthly payment to be used in the debt to income ratio calculations. Sometimes when that happens, the applicants do not qualify. If you don't, we will notify you, and there's a few things you can do. Number one, you can apply for a student loan forgiveness. You can visit the www.studentaid.gov for more information. Number two, you can apply for an income-driven repayment plan with your servicer. You can give them a call, and most likely you can do that online. And number three, you can check for whatever current repayment guidelines or options are currently available to you. Um, and number four, you can always, almost like last resort, do a student loan consolidation or a refinance to lower your payment so that you can lower your total DTI to stay under 45%. Affordability restrictions. We are able to offer a low affordable mortgage and keep the cost of the construction down with the help of volunteers and donations. But there are some restrictions that come along when you purchase a home with us through this program. There's an affordability term, which can be anywhere from 45 to 55 years. The home must remain owner occupied for the full amount of the term, whether it's 45 or 55. Even if you pay off your mortgage early, if or you pay off your mortgage on time after 30 years, so your mortgage is 30 years, but the affordability term can be longer. If you decide you need to sell the home, um, we do reserve the right to purchase that home back from you, and we can give you what you put into as far as principal and maybe some shared equity You are not allowed to sell the home in the open market of the real estate unless we are unable to buy that property back from you. But we will notify you if that is available. Title transfers are not allowed. You cannot add a relative of any kind. The only exceptions, but are not limited to this, is there's a death of one of the owners. And obviously, you can remain in the home. The surviving spouse or surviving owner can continue being an owner, or there's a dissolution of the marriage. One of the spouses is awarded the home or wants to stay in the home. You can remain in the home and continue being owners. But if in the future you remarry, you are not allowed to add that new spouse. The new spouse will need to qualify for the program. Um, and also, if you put the property in the trust, that's okay. That is allowed. Anything other than that, with the exceptions of a few other ones, you are not allowed to have any transfer of titles or add new owners to the title. How to prepare for the program. We're going to go over a few things you can do now to get ready and begin to prepare for the program when you submit your eligibility form and then you're invited to submit a full application. Number one is employment. Maintain stable, consistent employment. If you have a change in employment, it's recommended you stay in the same industry. Number two, if you're self-employed, you will need to have a minimum of 2-year history documented in your tax returns with your Schedule Cs, and also provide uh, a year-to-date profit and loss. Number three, pay down your monthly debt and make your monthly debt payments on time. If you have student loans, like we talked about earlier, try to enroll in a repayment plan to reduce your monthly payment. If you have a high monthly payment for your student loans, if you have open collections or payments or your past due on payments, bring all that current immediately. If you want to dispute a collection, that's fine, but just know that until that dispute is clear, that will continue to hurt your credit and directly affect your credit score. Number four, develop a financial plan to increase savings. Remember, you'll need $16,000 to $20,000 in the bank to be able to purchase a home with us. So you can begin a financial plan by cutting spending, and if you cut spending, then you're able to pay down your debt or increase your savings. And then number five, stay in touch with us by signing up with our monthly newsletter. That way you will be notified of an open application period and you won't miss an opportunity. I get a lot of calls where people are asking if we have an open application period and it's currently closed, and I let them know you just missed one. So you want to stay in touch with us so that you are notified immediately of any opportunities that you may be interested in. Now we're going to go over a few of the required documents that you will need once you're invited to submit a full application. Um, Number one, identification. You'll need your government picture IDs, passports, driver's license, California IDs, government IDs for anyone who's 18 or over. And for the minors, you can just use your birth certificates. You'll need to gather all Social Security cards. If you don't have them, you can request one from the Social Security office. We'll need a copy of your current lease agreement. We'll need copies of your last 3 months of your power and water for utilities. And if you have a full-time student going to college or university, we will need their schedule of classes or a letterhead documenting that they are true indeed a full-time student. And you'll also need to provide your last 3 years of your federal tax returns. And those are the 1040s, not your California forms. We don't need those, which are the 540s. We don't need those. We only need the federal tax returns for all adults in the household. Even if you are not applying to be an applicant, but you're still part of the household, we need um, those tax returns for everybody. We need to be able to document um, the income to make sure you qualify as a household. And you also would need the last 3 years of W-2s or 1099s, and for all household members as well. Now, for the assets, which are your bank accounts or 401k accounts, we'll need your last 3 months of your statements, the most recent, from your checking, your savings, any CD accounts, investments, retirement accounts. We need those for everyone in the household who's 18 years and older. We're going to continue with the required documents for a full application for income. You'll need the last 3 months of pay stubs for all adult household members, whether working full-time or part-time. If you're self-employed, we'll need your last 2 years of personal federal tax returns. And if you have a business, a registered business, we'll need your business federal returns as well with all schedules. And we'll need a year-to-date profit and loss statements. And this is how we'll calculate the income for self-employed. If you're on a fixed income, whether it's Social Security, retirement, whether it's SSI, a pension, an annuity, anything like that, we'll need the award letter, your most recent award letter. And in addition to that, we'll need current receipt or evidence that you're receiving that income as well. Now we're going to go over some of the program participation requirements. If you are found that you're qualified and we reached out to you and you were approved and you were enrolled into the program, these are the requirements. Number one, there's sweat equity. Those are volunteer hours, can range anywhere from 200 to 500 hours, which usually takes about 6 to 9 months to complete. These hours don't carry any value. You will not be paid for any of these hours, but they are a requirement for the program. And you can complete some of these hours at our construction sites where we're currently building homes. It could be building, help to build your home or someone else's home. You can also complete your hours at the restores, the one in Duarte or in Pasadena. There's many positions available there. And we're also involved in a lot of events in the community. You can sign up for those. There's a volunteer portal that you can sign up and you'll be able to see all the opportunities to complete your sweat equity hours. In addition to that, you do have home buyer education hours. It's 2,500 per applicant. Um, each applicant needs to take a 8-hour HUD course. We can give you information on how to do that, usually online. And there's a fee for that. If you can pay and submit your certificate, we can reimburse you for that. And then there's additional online courses that we will be emailing you, perhaps on a monthly basis, that you'll need to be able to complete as well. And number three, communication. Um, we work closely with you throughout the process. So we do send out monthly surveys. We want to be able to know that if you're in the program, you're working on your sweat equity, you're working on your home buyer education hours. We want to know if anything's changed. Have you had an employment change? Has anything changed in your credit or your assets? So those are the three main things that we're looking for to that you keep qualified for while you're working on your sweat equity, because it can be anywhere from 6 to 9 months, maybe up to a year. And if something changes, we want to be able to help you with that. We're not going to disqualify you immediately, but we will do our best to keep you qualified in the program. If there's a change in your household size, that definitely changes your qualifications for the income. If you went from a household of 5 and now you're a household of 4, so we're going to have to relook at your total household income and make sure that you still qualify based on that household change. If you have a change in employment, if you no longer employed, or if you have an increase in wage, we want to make sure you are still meeting the minimum income, or if make sure that you're still under the maximum income for the household. If you had some large expenses and decreased your savings, that would not necessarily disqualify you immediately. Um, uh, but we do want to know about it, and we would like to help you develop a financial plan to increase savings and see where you can make some changes to be able to bring that back. We know that things happen and sometimes there are unexpected expenses, but we're going to be able to work with you throughout the process. And we want to make sure that you maintain your eligibility and your qualification until the end. And the end won't be until you close escrow and you get those keys for the house. What is the application process? We've gone over eligibility, we've gone over qualifications, we've gone over income, credit, and savings. Now, the process to submit an application is only during a application period. It's a pre-application. It's a very minimal information. You're not going to submit any documentation. That application period can be open anywhere from 15 to 30 days. After the application period time, we close it and then we review who was eligible, and then we'll send out invitations to submit a full application. And that's number two, and that will be through email. So make sure you're constantly checking your email after the application period is closed. And once you are able to submit your application, where you're going to need to upload your IDs, your tax returns, your pay stubs, your utilities, your bank account information, income information, and documentation. Add every person as a household member, determine who the applicants are. This will all be done online, and then once you submit that, we can begin the application review, first come, first serve, and then we'll do additional screening. If you're found um, qualified, we'll notify you via email and phone, and we can invite you to become part of the program where you will sign a partnership agreement, and we'll discuss what the requirements are of the program. As we discussed earlier, the sweat equity, and the home buyer education, and maintaining eligibility. Um, Number five, that's when you begin working on your sweat equity at the construction sites, restores, events. You do your online homebuyer education courses. It can take up to 6 to 9 months, maybe 12 months. When the time is right, we will have you sign a purchase agreement for a home. And with that, we can open escrow. Escrow is usually about maybe anywhere from 30 to 60 days if there's no delays. Upon opening escrow, eventually you will receive your mortgage loan documents where you will agree to all the terms, and we will be with you. We will go over those with you. We will be here to help you. And once you sign those, you wait a few days, and then eventually you officially become the owner and you close escrow, and we hand over the keys for you. So how do you apply? Well, I mentioned earlier, application periods vary, and they're announced in a newsletter. We put it up on our website, social media. Um, so whenever those application periods open, that's when you want to submit your pre-application. And pre-applications are only accepted during those periods. Other habitats do it differently, but you can visit our website for more information. With that, this concludes our affordable homeownership informational session. Thank you so much for your time and your attention. If you have further questions, please feel free to email us at homeownership@sgvhabitat.org, or you can call us at 818-937-2010. Thank you. Have a great day.